Welcome to the Trading Lounge and the Indices report, and starting with the US 10-year notes, which would be doing pretty much the opposite to US stock. So we were looking for a top here of wave 5 here, and then we were looking for a simple A, B and C correction here. Now, the first move down through here, if you've got a close eye, you can see that it's in 5 waves, the strong third wave, fourth and fifth wave here. So we should see an A and a B and a C wave here, a 3-wave counter trend retracing 50 or 60% as wave B, and then wave C to the downside. Now, wave C may not come all this way down to the 50 and the 61.8% here, but that's sort of the target that we're looking at. But normally wave C here would have some sort of relationship with wave A in terms of size. So that distance here, which fits quite nicely in this full point here, we would see something like that into 2850 sort of area, 2872. Now, the other point here is that while this move down here has been moving down, the stock has been stronger. Now, while it bounces off the 129 in 3 ways in the counter trend here, it's going to make stock weaker. Okay, and then this move down through here will also make stock stronger as well. So it's quite important to, these guys can be doing the note can be doing the mirror opposite to the indices. And sometimes they run together for a little bit, but yeah, I think at this point in time, this strength here will show weakness in stock. So short-term traders will need to navigate, this strength in the notes here. So moving into the S&P 500 here. Just on the 4-hour chart, we're working through an Elliott triangle, which is a 5-wave structure, with each wave within that structure being 3 waves. Now, those 5 waves, we'll label them as an A wave, a B wave, a C wave, a D wave and an E wave here, and then we push up here. So while notes rather, are pushing up off that 129, we should see the same counter trend to the downside here for stock. So it's not quite the time to be buying stock just yet. We'll be looking at that once wave E comes into place here, and then we should be looking for a move to the upside here, and and this is where we'll be looking to build into stock. And so the other point that I need to make here too, if this whole pattern that we've been working through here, if it's going to fail and create a bear market, then it's going to do it from this top here. Now, this top may have a little bit more to go in here, and we can look at that in a moment. But one of the main points here is that this move down through here is an E wave here, and then a move up. If it's going to fail, it's just going to move straight down through here. Okay, so that would be, and the reason for that is that this move up through here is in a very clean 3 waves, in an A and a B, and then 1, 2, 3, 4, and 5 for the C wave. So it's a perfect counter trend. Now, this move down through here, it can be counted as 3 waves or 5 waves. So if it is 5 waves moving down here, then we've got our counter trend here, and then we've got our next leg down through here, and then we could have an A and a B and a C here as a corrective rally, and then we could move down from that point there as well. So we're going to have to be very careful what we do at this particular junction here, and we need to wait for it to unfold. Then we need to wait for the evidence, and the evidence will be in the structure. We may be able to pick it up in the ABC structure here, or we may have to wait for the first impulse wave to the upside, then the pullback, and we want to be sitting on above group 2 here on support as well. So there is a a tricky little bit we got to get through here. Yeah, and that's kind of the same with all the markets as well. Just moving in here a little bit closer here on the 2-hour chart. Yesterday we were looking for, well, we were in this little area here, so we were looking for a wave 4 pullback and then wave 5 to the upside. So we were counting 5, 1, 2, 3, 4, 5 for wave C to the upside, and now we'll be looking for a 50-60% retracement level. The support will be in at the midpoint. The midpoint is always number 5, so 20 or 2050 here, so I got that wrong. So we'll still stay within group 2, 2065, 65, 72 and 80 here as well in this little area through here. So we're sort of expecting this to stay support. So if this group 2 becomes the retested resistance, that means the 65 and the 72 here, after it's done its little move here, if it can't get back up here at this point and fades from here, then I know that we're going to be looking very bearish, and we will have to move quickly to be net short at that point, because it would take off to the downside reasonably quick, but we would get a retest. This midpoint here is the support. So if this was going to turn into a bear market, we need to look at both sides all the time. So if this became a bear market, that 2050 would become the retested resistance here. So we'd be looking at a move down, a bounce back in here, group 2 becoming the resistance, a move down, and then this would be the retest here. So that failing of that would put us onto the downside at that point there. So that's what we just need to work through this later in the week. But as it stands, the bias is for this little 5 waves up to complete itself, the 1, 2, 3, 4 and 5 here, then the A, the B and the C here, pulling back into this area through here. So we know if it comes down too far here, we know that there's something wrong somewhere. So even as a long trade, you want it to come down below the 2072 and then sit back on the 2072, build your first position there, then build on to the 80 and just hang on from that point, because there will be swings at 2100, but once completed, then it will move to the upside, because we know where we will be at that point. So it's just this junction here that is a little bit of a concern. So just be a bit mindful at that point. And of course the Dow Jones the same as well. Here we're working, this market is working with the 18,000, and it's still resistance, isn't it? So it's not support, it's the closest largest number, and it's resistance, and essentially we need it as support. Now that said, we can build in, if we get this E wave here, and we can confirm that it actually is in 3 waves, and it normally confirms simply by this moving up through here, and then it makes it look like 3 waves at that point. So yes, we do have to wait here, but we should be able to build in, on above the 17,800 and 900, and then on top of the 18,000, and then through group 1 to the upside. But we need to get there first, so don't rush. It's not quite ready yet. And as I mentioned before with the S&P 500, this floor here at 17.5, if that's, if we start to see that, if this market moves back down here below these lows here on the cash market, then we know we've got more of a bearish picture in play. And we need to take action in our equities, and of course also if you're trading indices as well. So they're the 2 scenarios, and we're just simply going to observe these guys play out here. So this little move to the upside here, yes, well, extensions in wave 3 here. So look, it seems to want to push high, but the main point is that we're looking for an A and a B into C, and it might just end up being something like that before it pushes up. But we do need to see that, and that's what we'll be looking at in the next session or so. Now the DAX, the European markets, just starting on the bigger picture here, just to sort of show you sort of where we are in the scheme of things. This is the monthly chart here, and we have wave 1 here and wave 2 here, and we're looking for wave 3 up here. That said, within wave 2 here and wave 3 up here, we're looking for 5 waves of primary degree, so wave 1 and 2 here, and then we're looking all the way up here for wave 3 here, and within this wave 3 here, we're looking for 5 waves of intermediate degree here in brackets, so we're basically looking at 1 and 2 and 3 and 4 and 5 here. So we're in the third wave of the third wave here, and then we're in this 5th wave of intermediate degree. In this 5th wave of intermediate degree, there'll be 5 waves in there, 1, 2, 3, 4, 5, and that's what we can look at now. So in that 5 waves, we've got wave 3, wave 4, and we've got wave 5 of intermediate degree here. Now in intermediate degree between 4 and 5, we've got 5 waves. We've got 1 and 2 and 3 and 4, and we're working into 5 now. So you can see that that we're getting close to the ending of this particular structure here. So once we get to how far will it go, it's a little bit tricky. Normally, if the extension's in wave 3 here, then wave 1 and wave 5 will be roughly the same length here. So we can look into that. So from wave 4 here, we've got wave 1, wave 2 here, and then we've got wave 3 up to here, and we've got 5 waves of these. The orange are minor degree, they're the next degree smaller than the intermediate degree, and then we have minute degree here in the blue here. So we've got 1 and 2, 3, 4, and 5 here to make third. So we're working through the 4th wave here. Now the 4th wave, wave 2 was simple here, so we would normally expect wave 4 to be sideways and complicated. I just found that initially here, this little move here as wave 4 was a little bit small and never retraced back to the 38.2 retracement level, and even at this height here, top of wave 3, it will come in at this figure here. So 11,000. So it's still, it's just a little bit small. That's what sort of concerns me about it. So with that being small, and this is it here on the 4-hour chart here, an A and a B and a C here for wave 4 here. Now this has the potential from wave 4 here to move up here further, but at the same time I need to be mindful that, well, this wave 4 here may get a little bit larger, and it could end up over here. So this is just the medium level. It's not just the medium level, it's a medium. 11,500 is a medium level, and it's important. So if this was going to be a larger wave 4 here, because we need to look at both sides of the cat, it would be an A wave to here, a B, alternative B wave right up into this point here, because this B wave here would be 3 waves. So it would be an A wave to here, a B wave to here, and a C wave to here to make the larger B, and then this would be the C wave coming down through to here. So this is still possible here, okay? So we've got this junction here, and we've talked about it before, but we need to nail it down a little bit at the now. So this is at an important juncture where it can move higher or it can fold lower. So the S&P 500, we're looking at both sides of that, and we need to look at both sides of this here as well. So, but as it stands, our primary count is up for 1, back for 2, and then we're looking for this minute degree here, this blue one, all the way up into this area through here, with 5 waves of it in green here. So 1, 2, 3, 4 and 5 here, and in green 3 here we're looking for 5 waves. So we've got 1 here, the top of this alternative B here, back for 2, up for 3, 4 and 5 here. So really we've got an interesting thing here. This market can move quite strongly from here because it's got wave 1, 2, 1, 2, 1, 2 here. So this part of the structure in here, in this area here, wave 3, can move quite strongly within here. It's where you get gaps and things. So, you know, if we see this market after it retraces here not getting strong through here and gets weaker through here, then we know that we'll be counting 5 waves down here for wave C here. We know that it will be corrective and not a bigger bear market because the initial structure here in the first leg here is in 3 waves, an A and a B and a C. There's no doubt about that. So it makes all of this here corrective, and it would move up from that point there. So yeah, this little juncture here is important. So just drilling in here a little bit, we've got, as we've got it so far for the primary count, we've got wave 4 here. We've got 1, 2, 1, 2, and then we're looking at 5 little waves in here for wave 1 here, and then ABC back into 12,000, the 61.8 retracement level of those little 5 waves. So a retest into 12,000 and then up from that point. Now, this 12,000 really becomes a line in the sand that we can use because it's a large number, and if it becomes the resistance at any point through here on the retest here, then we know that if it comes through here, then we know where we are, and we need to be looking at this structure here. So we need to, readjust to accommodate this, and then up from that point there in terms of global stock equity trading on CFDs or indices such. So just drilling in here a little bit further, this little structure here that we were working through yesterday is looking a little bit like this. So we've got wave 2 here, wave 2 here, and we're looking for this wave 2 here, because this wave 2 here, this will give us our buying point in time. But below 12,000, well, we need to be net short there. So this little junction here is important, and here we can start to see the little 5 waves up here, and we can drill in here further on the 15-minute chart here and just look at this here. So from the 15-minute chart, the low here, we can see wave 1 and 2 here, 5 waves up for wave 3, wave 4 sideways, and now we're looking at wave 5 up here. So we should see this start to roll over in the next session and retest 12,000. Look, it may not come below here and all the rest of it. It may just sort of, stick a little bit closer to the 12,100, one being the strongest number in the market. It may just do something like this and then find support here, and we can use that reference point as a catalyst to trigger a signal trade to the upside at that point. So we do need to work through this, and yeah, that's sort of where we are. So it's settling into the right place now as such, but the American markets, if they follow that wave E in reflection of the US notes, then this is going to be pulled down with it as well. So it'll be interesting to see, but there is no doubt, if I bring over this daily chart here, for instance, there's no doubt that this particular pattern up here on the daily chart is actually corrective. The only thing we've got to watch out for, as I mentioned, this is the point of failure here. We can get an A wave, a B wave, and a C wave here, making a larger wave 4, which would be a better fit for me, but being small here means that it's strong, so we can't afford to miss it. Do you know what I mean? So yeah, the FTSE is, it's not like the DAX. The economy there is not as strong, and that's reflected back in the pricing of certain markets and whatnot. And the FTSE is one that struggles a little bit, and it's struggling at its old highs at 6,900, and of course we have made new highs at 7,000. So now here on this daily chart, basically, we also need to be careful here as well. Now, if you're going to short a market, then the FTSE would probably be the one. But if the FTSE gets too far behind and lags, then it needs to catch up a little bit. So mindful of that. But as it stands at the moment, we should just be working straight up here. So from wave 4, up for 1, back for 2, up for 3, back for 4, and up for 5, and then a corrective pattern, and then further to the upside from that point there. Okay, so with the if the US market's correct into that wave E, so to speak, and the DAX gets a larger wave 4 correction, then we're going to see the same thing here as well. We would have to be looking at this in a larger pattern here as well. So this would be an A wave, a B wave right here, and a C wave coming into play here. So this would be an A and a B and a C at this time here. So this is its point of failure here as well. I'm going to take a closer look at this in a moment. But if this was the case, then we would be looking at 1, 2, 3, 4, and 5 here, and then we'd see a move to the upside at that point. But as it stands, we're just going to track this, continue tracking this to the upside here, but we need to be aware of this situation if the DAX does its larger wave 4. Okay, so just drilling in here now into the 4-hour chart. I know some of the labeling might seem a little bit confusing there, and but the larger pattern here, if the DAX made a larger pattern, would be an A wave to here, the alternative B wave when this finishes just here, and we'll look at that in a moment, and then the C wave here, and then up from that point there. But so we need to be just mindful of that. But as it stands here, we're looking at this structure here in terms of 1 and 2, and we're looking for wave 3 here, and then wave 4 here, and then wave 5 here, then a corrective pattern across 7,000, and then further up from that point there. So currently we're in wave 3 here. And yeah, we can go in there and have a look at this. So this is how it looks here. So up for 1 here, A, B, C for 2 here. And then we've got wave 1, 2, 3, 4, and wave 5 coming into play here, which I don't think's finished just yet. I think there's a little bit of an up thing there. Not that it matters that much, but we need to look at what happens here, because this is the point that can fail from here as an A wave here, a B wave here, and 5 waves for a C wave here. So it can move down at that point there. So that's what we need to understand. And you know, we could say just on the outside, the 6-9 here as a resistance here would you know would be the obvious catalyst for considering, you know, a larger wave C down through here. So that 6-9 can become important. Just drilling in here a bit further, just to look at this little structure up here, because this is where it terminates here as 1 and 2 and 3 and 4, the same as the other markets, and then up 5 here. This looks a little bit corrective here, so it can still have one more little high here. Let me just check. 1, 2, 3, 4. 1, 2, 3, 4. It can have one more little wave up here. Not that it's important, but what we would be looking at here as well in terms of a retracement, if this was the high here, and this is what you'll need to do once you can see that the high is in place here. So let's just imagine that that's the high there for now, but it could push high because it looks a bit corrective in this leg and also in this leg here, but I'll need to have a look at that on a 2-minute chart or something. But all of this here, this whole 5-wave structure moving up through here, the 38.2 retracement level at this stage would be here at 6-9. Okay, so that makes it quite easy to work with. So if we see that 6-9 as resistance, then we know that, well, there's a problem at that stage. Well, it's not really a problem, it's just that we know that we'll be going much lower at that point, so we need to be on that side of the market. So yeah, that's where we are for that. And you can use the midpoint here. If the midpoint becomes the retested resistance here, then you know that this wave 4 here is on the way here. So 69.50 is a retested resistance, is the you know, is that point that you'll know that that's happening at that stage. Okay, so the Australian market, the ASX 200, we've got a monthly chart here, so we'll have a look at the bigger picture here. Our primary count here on the monthly is that this is a wave 3 up here. The GFC was a large wave 4, and we're looking for wave 5 further up into this area up here. And the alternative count is an ABC, and the ABC would simply be, this would all be the A wave here, this would all be the B wave here, up into number 3 here, okay? And then we'd see a wave C come into play here. So it's a larger A, B, and C wave here. So it's only when we get to wave 3 here that we need to really concern ourselves with this. But the bias is for this to be wave 4 here and wave 5 to continue moving to the upside there. And the reason for that, if you don't mind me sort of cutting across here, is looking at CBA, what basically our leading bank. And you can see here that from its wave 3 here and its wave 4 in the GFC here, I mean, our market hasn't really taken out the top here yet. You know, the XJO, where the Combank has steamed along here. So what that means is, it means that this market here is in a bullish market. So from wave 4, we're looking up at wave 5 here, and we're looking at 5 waves within this wave 4 to 5. So that would be 1 and 2 here. That's very clear. And all this is just the 3rd wave here, because the 4th wave here would have to have a bigger correction than this correction here of wave 2 here in blue. So this A, B, and C here is wave 2. You know, we haven't seen a bigger correction than that yet. So I would expect that at 100, and that would be the wave 4 here that we're looking for. So this structure here is very clearly not completed. So that means that the XJO and whatnot will push higher from that, and this is kind of the same count that we've got on most of the global markets in one way or another anyway. So we can come back to this in a moment, but back into the ASX 200 here. So it hasn't taken out its wave 3 high here, but at the same time we're counting 5 waves up, which also fit the CBA thing, the 1, the 2, and we're coming up for wave 3 here. Then there'll be wave 4 at 6,500, which is a medium level. It's halfway between 5,000 and 8,000. It carries a lot of weight, unusual number, but it could be 65 cents or $6.50, $16.50, all that sort of stuff. But in this case, 6,500. Medium level, very important, and that's our target. Well, in fact, our target is actually 6,200 in this case, but we can work within that a bit later. Main point here is that in wave 3 here, from wave 2 here, we're looking for 5 waves of intermediate degree, so 1 and 2 and 3 and 4 and 5. So from wave 4 here, keep your eye on this intermediate wave 4, we're looking for 5 waves up through to here for wave 5. With that in mind, we can look at a smaller chart here, and we can see that we've got our intermediate wave 4 here, and we're looking for 1, 2, 3, 4, and 5 up through to here. So with that in mind, we're looking at this structure here. I know we've been over this before, but it's always just good to, go over things a little bit. So there's our 5 waves that we're looking for. We've got wave 1 from intermediate wave 4. We've got wave 1, wave 2, beautiful wave 3. And because wave 2 here was simple in terms of an A and a B and a C, if wave 2 is simple, then we can expect wave 4 to be complex. Sideways and so forth, and this is where you get triangle patterns and double zigzags. And what we've currently got here at the moment, we have got this is the correction here. So we've got this A wave here, B wave here, and C wave to this point here. But I also need to point out too that if those US markets pull back in for not so much the E wave, but the DAX pulls way back down, and the FTSE does as well, then this particular pattern, this wave 4 is not finished. As it stands at the moment, we're looking at it as an A and a B and a C, and we're going to be moving up from that point. But we need to be careful that we don't get a triangle here. So another move down here, and then the move up here. So basically an A, B, C, D wave here, E wave here, and then a move up from there. So that's what we need to discuss today a little bit. So just drilling into that space a little bit here. Just bring this wave, this is just another daily chart, but just 8 hours. So we've got wave 3 here. As it stands at the moment, we're looking at, you know, the A wave here, B wave here, C wave here, and then we're considering moving straight up from here. So that's on the cards. But as I just mentioned then, we could have this as the A wave, the B wave here, the C wave here, the D wave right to where it is here, an E wave also in 3 waves back here, and then move up from there. So we could get a larger retracement here, okay? So that's what we need to be mindful of with this situation with the US markets where they are, and the DAX and all those, and we know very clearly what the line in the sand is on those markets and the, you know, those price points and so forth. So just keep this in mind here. But as it stands at the moment, our primary count is to the upside. Just going into the 2-hour chart here. So we've got wave 4 in play here. Now we need to look at this as minute wave 1 and minute wave 2 here, and then we're looking at minute wave 3 all the way up here, okay, with 5 waves in it. So the 5 waves will be those green guys there. So that would be up for 1 here, back for 2 here, then this would be up for 1. We need to come back for 2 here, 3, 4, and 5 for the 3rd wave here, the 4th and 5th. So that's what we're looking at here. But as you can kind of see here, there is a little gap here that is a concern. So, you know, we may just come back and cover that there as well, in terms of just get rid of this here. This wave 1, this wave 2 here might just get a bit more complicated in terms of an A wave, a B wave, and a C wave here to cover this gap, and then move off from here. But one of the main points here is that if it does come down and close this gap at any point, then that's fine, but we don't want to see the 5-9 as a retested resistance. It can come down and close it and then move up from there, but the 5-9 as the resistance makes this wave D here come into play, and we would be looking for a wave E at that stage. So a wave E would come in from the low of wave A here. We can just bring this across here. Not that it's a big deal, but of course if you're trading this, then it's a big deal, you know. So the wave E should stay on this line here. So instead of having wave 2 here, we would need to look at this as a move into this area here before we see a move up through to here. So just keeping that in mind, but going in further and staying with the count as it is. So we've got wave 1 in blue, wave 2 here, and then we're going up for wave 3. And within that, we know that we're looking at wave 1 here and wave 2 here. And this little, if we can make a high here today, then I know that we're, or even that's not quite true either, actually. When I look at it, we can make a high here and still move down from here. So let's move in here a little bit closer here. So just we already have our little 5 waves in here already to this point here. So this wave 1 here can come at this point here. Wave 2 can pull back to the 50-60% area here. It's just going back over this. I should have put a bit more attention to this, but that's okay. Let's just look at this here for a second. This So this can come back into this space here, but if it moves below the 59.29, then you know that we're looking for 5 waves to the downside, which would be 1, 2, 3, 4, and 5 into this area here. Once again, it can come down and cover that gap there. But it must move back from that point. If today, and probably the most likely event is that this will settle into its closing scenario here. So if we see this move up into this area here, then we'll just see the normal play of an A, B, and C here, and then a move up from that point there. So in a way, what you need to do today is just buy strength, and in terms of buying strength, a move back into group 2 here. So group 2 would be 9, 5, 5, 9, 6, 5, and then 5, 9, 7, 2, and 80. That's group 2 there. So if this market can get back into group 2, it's 59.65, then you know you're going higher, and you would trade to 6,000, and you'd get out at that point, because we'd be looking for a corrective move from there, which I think this one's the case here. So I think that it'll be something like this here today. So the trigger for being long is the market being in 5965. Okay, so far here I'm looking on the 15-minute chart. On the closing here, this little move here is corrective here. It's in 3 waves, so we should move up from that once it's completed. Can I just have a closer look in here? Okay, so here we go. So just on the 5-minute chart here, we can see from here 1, 2, 3, 4, and 5 here. So yeah, it's just unfortunate I need to see more of this correction here, because I can see that this move here is in 5 waves, 1, 2, 3, 4, 5, the correction here, and then we'll be looking for 5 waves here as well for this correction. But beyond that, if the market moves beyond 59.50, then you got yourself a problem at that stage. But otherwise, this should resolve itself here and then move up from that point there. So that's what you're looking for. So yeah, just allow that to be. So maybe you can get it on 59.60 as a tested support, then add on 65, then add on 68, add on 70, add on 72, add on 73 as tested support. So you could really build in through those numbers. Alrighty, that's it. So cheers.